Welcome back to Money Moves University. I'm James Jackson III. I've sat in front of bankers, employers, and even the IRS, and I'm here to tell you what none of them put in the brochure. Let me ask you something before we get into it. Have you ever done everything right or felt like you've done everything right? Maxed out your withholding, checked every box on the W-4, thought you were covered, and then April rolls around and you still owe the IRS a number that made your stomach drop? Because I have more than once. And for a long time, I did not understand why. I thought paying taxes was simple. You work, they take money out, you file in April, maybe you get a little back. That was the whole picture as far as I knew. It is not the whole picture. So today, we are talking about what nobody told you about taxes. Or maybe they did. I don't know. But I'm here to share some things. The stuff that is the difference between paying what you actually owe and paying way more than you actually should. For most of my career in financial services, I had a good salary. And a good salary, depending on the bracket you land in, comes with a tax bill. Not a small one either. I remember adjusting my W-4 all the way down to zero, which is the maximum withholding you can elect, meaning you are telling your employer to take out as much federal tax as possible before the check ever hits your account. I did that, and I still owe it at the end of the year. That is a humbling experience. You think you have covered yourself. You think the system is handling it. And then TurboTax tells you that you owe $3,000, and you're sitting there wondering what went wrong. What went wrong is that withholding is not the same as tax planning. The government is estimating based on your W-2. They do not know what else is going on in your financial life. And frankly, they are definitely not looking out for you. What changed the equation for me was my side business, speaking engagements, consulting, work I was doing outside of my regular job that I was getting paid for, that I was tracking, and that came with expenses. Those expenses became write-offs, my mileage, my home office, my phone, my professional development, business meals, software, equipment, all of it legitimate, all of it documented, all of it reducing my taxable income. And when taxable income goes down, the tax bill goes down with it. Sometimes I still owe a little, but nothing like before. The write-offs changed the math completely. Now, here's the part I want to be straight with you about. I do not do my own taxes. I use QuickBooks for my business expenses and my mileage tracking app on my phone. So by the time I sit down with my accountant, everything is organized. A few clicks and the forms are sent. But the actual tax work, I pay a tax professional to handle that. And I am at peace with that decision. Not because I could not learn it, because my time is worth more than the hours it would take to do it right. And a good accountant finds things I would miss every time. You do not have to understand every line of the tax code. You have to understand enough to ask the right questions and not leave money on the table. Before we talk about deductions and credits, I'm going to break down the formula for you. Because once you see how the math works, everything else makes sense. So, you start with your gross income, everything you earned, and then you subtract adjustments, things like student loan interest, contributions to a traditional IRA or self-employment tax. This gives you what's called adjusted gross income, or AGI. Then you subtract your deductions, either the standard deduction or your itemized deductions, whichever is larger. What is left is your taxable income. This is the number the IRS actually taxes you on. Apply your tax bracket rates to get your tax owed. Then you subtract any tax credits, dollar for dollar deductions in what you owe. What remains is your final tax bill. Notice what is happening there. You're not taxed on everything you earn. You are taxed on what is left after deductions and adjustments pull the number down. That is the game. And most people do not know they are playing it. Two more things you need to understand before we go further. First, tax brackets are marginal. That means only the income that falls within each tax bracket is taxed at that rate, not all of your income. So if you are in the 22% tax bracket, you're not paying 22% on every dollar you earn. You're paying lower rates on the first portions and the 22% only on the top portion. People routinely avoid raises because they think a higher bracket means they will take home less. That is not how it works. Second, a deduction and a credit are not the same. A deduction reduces your taxable income. A credit reduces your actual tax bill dollar for dollar. $1,000 deduction might save you $222 in taxes depending on your bracket. But $1,000 credit saves you $1,000 in taxes. Credits are far more powerful, and most people do not know all the ones they qualify for. Let me talk to you about two people, because this episode has two different listeners and they both need different information. So, listener one, listen up. This is the W-2 employee who wonders why they still owe. So, if you are a straight W-2 employee, one job, one employer, regular check, here is what you need to know. Your employer withholds taxes from every paycheck based on what you told them on your W-4. The W-4 is that form you filled out on your first day of work, probably without reading it carefully, and have not touched it since. Form determines how much gets taken out. If you fill it out wrong, if your life has changed since you filled it out, if you got married, had a child, bought a house, got a big raise, the withholding might not match reality anymore. And you end up either owing at the end of the year or get a big refund. Let's talk about that refund. Getting a big refund does not mean you won. It means you overpaid the government all year and they're giving your own money back with no interest. A $3,000 refund means $250 extra came out of your paycheck every month that could have been sitting in your savings account earning 4 to 5%. The goal is to get as close to zero as possible. Owe nothing, get nothing back. So, for the W-2 employee, the biggest moves are: one, revisit your W-4, especially after any major life change. The IRS has a free withholding estimator at irs.gov that walks you through it. Update the form within your HR department. Two, maximize your 401k contribution. For every dollar you put into a traditional 401k reduces your taxable income for that year. The 2026 contribution limit is $23,500. That is a meaningful deduction for most people. Three, contribute to an HSA if you have a high deductible health plan. Contributions are tax deductible, growth is tax-free, and withdrawals from medical expenses are tax-free. That is a triple tax advantage. Four, know what credits you qualify for. Child tax credit, earned income tax credit, education credit. Credits come off the actual bill. These are worth finding. Now, listener two. The listener two person with the side income who does not know what they can write off. If you have an income outside your regular job, a side business, freelance work, speaking, consulting, selling something, driving for a rideshare company, you want to pay attention here. Self-employed individuals owe both employee and employer share of Social Security and Medicare. That is a combined 15.3% self-employment tax on top of income tax. A $10,000 side income could generate $1,530 in self-employment tax alone before income tax is calculated. That is the surprise that catches people every year. But here is the flip side, and this is what saved me. When you have a side business, you have write-offs, and write-offs reduce your taxable income. Here is the write-off list. Mileage. The IRS mileage rate for 2026 is 70 cents per mile for business use. Track every mile with an app that adds up fast, promise you. Home office. If you use a dedicated space in your home exclusively for business, a proportion of your rent or mortgage, utilities, and internet is deductible. Phone and technology. The business use, percentage of your phone bill, laptop, software subscriptions, and equipment. Professional development, courses, books, and conferences directly related to your work. Business meals. 50% of meals where business is discussed with a client or a prospect. Self-employed health insurance premiums. If you pay your own health insurance, the premium is deductible as an adjustment to income. The single most important thing for someone with side income, keep records. Every expense, every mile, every receipt. Because come tax time, you can only deduct what you can document. I use QuickBooks for my business finances and a mileage tracking app on my phone. It's called Mileage IQ, I believe. By the time I sit down with my accountant, everything is already organized. That system has literally saved me thousands. The write-off does not find you. You have to find the system that captures it. One more thing for the person with side income, and this one catches people completely off guard. If you expect to owe more than $1,000 in federal taxes on income that is not being withheld automatically, the IRS expects you to pay quarterly estimated taxes throughout the year in April, June, September, and January. If you do not, you may owe a penalty at the end of the year on top of the taxes themselves. Most first-year freelancers and side hustlers end up finding this out the hard way. I know I did. They earn $15,000 on the side, do not make quarterly payments, and then in April, they owe $3,000 in taxes plus a penalty for underpayment. That is a gut punch that is entirely unavoidable. A simple estimate. If your side income is meaningful, set aside 25 to 30% of it every time you get paid. Put it in a separate savings account. When quarterly taxes are due, the money is already there. Now, I want to be direct about something. I'm not going to walk you through every deduction and credit that exists because that is not my job in this conversation. And frankly, it should not be your job either. Tax software like TurboTax or H&R Block will ask you the right questions and can get most people through a straightforward return. If your taxes are simple, one W-2, no side income, no major life changes, software is probably fine. If you have a side income, a business, investment income, rental property, major deductions, or a complicated life, pay a professional. A good CPA or tax professional will find things you would miss, save you more than their fee costs, and keep you out of trouble. I pay one every year and I have zero regrets. Free option worth knowing. The IRS Free File Program offers free tax preparation software for people with incomes under $84,000. VITA, Volunteer Income Tax Assistance, offers free in-person tax help for people who qualify. Both are legitimate IRS-supported programs. All right, taxes. The stuff probably not many people told you or nobody told you. So here's what I want you to take from today. Deductions and credits are the difference between paying what you actually owe and paying more than you should. You do not have to become a tax expert, but you do have to know enough to ask the right questions and build the right systems. So here we go. Here's your homework for this week, your action step. Pull out last year's tax return. Look at line 1, your gross income. Then look at your taxable income. The gap between those two numbers represents your deductions and your adjustments. Now ask yourself, do you know what is in that gap? And is there anything missing? If you have a side income, open a mileage tracking app today. Mile IQ, Everlance, whatever works. Start tracking. Every mile has value. And if today's episode helped, share it. Send it to someone who celebrates their tax refund every year without realizing it's their own money coming back late. This one is for them. And if your organization is looking for financial education that covers the real stuff, not just the basics, visit moneymovesuniversity.com. And the next time on Money Moves University, we're going to talk about credit scores, the number that runs your financial life. We have talked about earning, budgeting, banking, and taxes. Now we're going to talk about the number that follows you into every major financial decision you ever make and exactly how to move it. I'm James Jackson III. Keep building, keep moving, and I'll see you in the next episode.